way to fight inflation is to remove all the inflation from the economy that the Fed put in there. So they have to shrink their balance sheet. They have to let interest rates go way up. They have to force the government to slash government spending.
Peter Schiff's dire warning about inflation will make you have a second look towards your financial future. Let's have a look.
Well, we've been creating inflation for over a decade. All the years of quantitative easing put a lot of inflation into the pipeline. And the Fed has barely withdrawn that liquidity. I think we're still seeing the impact of that, and especially the inflation that it unleashed during the COVID pandemic.
Amidst the global pandemic and rising inflation, Peter Schiff's warning is clear. The world's heading towards a financial crisis of epic proportions. Don't miss his urgent call to action.
Politicians are saying that the banking system is sound. Don't worry about your money. You better worry even more about your money, because the only way the government can make sure your bank doesn't fail is by destroying the value of the money that you have on deposit. It's inflation that is going to wipe out the value of everybody's bank account. Government has to pay higher interest. Where does the government get that money? Ultimately from the Fed. The Fed prints it. So because the Fed fights inflation by raising rates, it has to create more inflation to monetize larger deficits. That's one of the reasons we've already returned to quantitative easing. Quantitative tightening is a thing of the past. We're back to quantitative easing, so inflation is going to take off. From my perspective, it's bad news for anybody who was really hoping that the Fed has won the inflation fight. Powell has been talking about disinflation, and from that perspective, we have had numbers that have improved sequentially and on a year-over-year basis, but that was bound to happen. When you had a rate as high as 9.1 or wherever we peaked out so far. Because we have so much debt, the Fed is now forced to keep interest rates at zero. So unfortunately, average Americans, the middle class and the working poor are going to suffer the most severe bout of inflation in U.S. history, far greater than anything experienced during the decade of the 1970s.
Peter Schiff's latest warning about inflation is a dire reminder of the consequences of economic mismanagement. With the global economy in turmoil, Peter's warnings about inflation ring truer than ever.
Inflation is going to get much worse. In fact, what I heard from Fed Chair Powell was a lot of economic ignorance, especially when it comes to inflation. First of all, he said that he welcomes the disinflation. That disinflation is transitory. Maybe he doesn't realize that yet, but it is. But he also claimed that inflation is caused by consumer expectations. He's wrong. Expectations don't cause inflation. Neither do wages and prices. He said he was worried that maybe a wage price spiral could develop, and that's why the Fed wants to make sure it doesn't happen. The wage price spiral was a fiction invented by Keynesians. Inflation is caused by the government. It's caused by the Federal Reserve printing money and then Congress spending money. That's it. And spending is going up. In fact, he encouraged Congress to raise the debt ceiling so Congress can borrow and spend even more money. Ultimately, the Fed is going to monetize that debt. And we've only seen the beginning of inflation. And in fact, Powell said that inflation is creating misery for families. It's the government that's creating that misery and the Fed, because they're the ones that are creating the inflation. Inflation is going to run out of control. But remember, they've already slowed down the pace. They only went 25 basis points. And even if we get a couple of more 25 basis point hikes, it's not nearly enough. And also, you have to look at the effect that higher rates have had on consumer behavior, which is pretty much nothing, because credit card debt is at an all-time high, savings are at an all-time low. So the higher interest rates have not stopped spending and encouraged savings, which is exactly what has to happen to bring down inflation. Meanwhile, as I said earlier, the government continues to increase spending. And if Powell thinks that a slowdown in the economy is going to reduce inflation, he's wrong again. That's actually going to fuel the inflation fire. So the real risk is that we end up with a financial crisis and a much more severe recession than the Fed recognizes. And then the Fed tries to prop up the economy and try to stimulate or combat the financial crisis by creating even more inflation.
Funds. What is it about foreign large cap value stocks that are good in this atmosphere?
Well, First of all those funds are in foreign large cap value stocks. So we've just got better stock picking and better sector allocations. But first of all, on bonds, I think bonds are a sucker bet. I mean, even if you're talking about 5 or 6% yield, inflation is going to average more than 5% over every one of those years. So you're going to lose money in bonds. If you want to avoid losing to inflation, you've got to get out of dollar denominated assets. And foreign dividend paying stocks are a great place to look, because you can get dividend yields that are as high or higher than some of these bond yields, but you have real assets that can rise in price as inflation continues to erode away the value of the dollar. And, last year the dollar was up, and that subtracted from the returns on my funds. But so far this year, the dollar is down. In fact, today it just hit a new low for the year as gold hit a new high for the year. And I think this could end up being one of the worst years ever for the U.S. dollar, and therefore one of the best years ever maybe for gold.
Yeah, gold's
and so investors should be looking there. I have a gold fund, and also emerging markets, which lagged last year. They're beating the U.S. market so far this year, and I think a weak dollar is going to be particularly bullish for the emerging markets. So investors should be looking there rather than U.S. stocks or U.S. bonds.
I was talking about how the economy was weak, but the Federal Reserve has been able to succeed with their propaganda effort to convince everybody that inflation is a good thing, and their job is to create it. Right? How's that for a 180, right? Because people used to say, the Federal Reserve is here to fight inflation. Now they're here to create inflation, to fight the absence of inflation. Right? They used to say, we want price stability. Well, price stability means no inflation. Now they've redefined price stability to prices rising by at least 2% a year. And if they're not rising by at least that much, we have to take decisive action to make sure that prices go up. Because somehow if prices don't go up, right, then the economy is going to implode into some kind of vortex, right? And so this is the propaganda effort that the Federal Reserve has been able to successfully, indoctrinate almost the entire world at this point into believing that a rising cost of living is an economic necessity, that somehow if the cost of living were to go down, that we would all suffer as a result of that. But so the Federal Reserve has been the main, I think, barrier to economic growth, to progress. Yes, I mean, the federal government is also complicit, but if it wasn't for the Fed, if the Federal Reserve wasn't willing to accommodate all this government spending by monetizing it and by keeping interest rates artificially low, the government would have had to come to terms with its insolvency years ago. And remember, the Federal Reserve said, well, if unemployment gets below 6.5%, we're going to raise rates. That's what they said years ago. And when they said that, I said, no, they won't. Right? I said they're lying. I don't care where unemployment goes. They're not going to raise rates. And sure enough, unemployment, the way they measure it, is now 5%, and they haven't raised rates. Well, I think the same thing is going to happen with inflation. They say, well, 2%, we get to 2.5%, we get to 3%. They're not going to raise rates. Why? Because they can't. Because we have too much debt. They don't want to bankrupt all these financial entities. But they're going to have to pretend, well, they're going to rationalize the inflation, or maybe it's transient, or they'll try to say that it's good for us. But the Fed's failure to raise rates and failure to deal with inflation is going to put more downward pressure on the dollar and accelerate the process. Meanwhile, you've got a lot of our creditors who have started already selling treasuries. The Chinese have sold over $100 billion worth of treasuries. Emerging market economies in South America and Southeast Asia, who accumulated trillions and trillions of dollars worth of U.S. treasuries.
I'm not going to give the Federal Reserve credit for trying to put out a fire that it lit. And by the way, they're not even throwing enough water on it to put it out. The Fed should have raised interest rates a lot more than it already has, and it should be raising them a lot more. It's gone much too slow, and not because, the economy can handle it. It can't. We're already in a recession. They just want to ignore that. The recession is going to get worse if the Fed continues I have various costs. I have labor costs, I have raw material costs, I have rent, I have other things that I have to pay, but I also have interest that I have to pay. And if my interest rates go up, that's just higher costs. What do businesses do with their costs? They pass them on to their customers, and higher interest rates are no different than higher wages or higher raw material costs. So it's going to be passed on. Expect the inflation rate to move up. So the Fed is going to be falling further behind the curve when it comes to getting, real rates positive, as it, pauses to kind of assess the situation in the, with global, financial stability in the banks. Inflation is going to get worse, especially if we get a big drop in the dollar, which I think is going to happen. I think the dollar is kind of teetering on the edge of a cliff, and it's going to fall off. At the same time, I think gold is poised for a major move up. And so that would be the mirror image of what's going to happen to the dollar. And you're seeing that right now, kind of, I think the dollar, it's a little bit of a lull before the storm, before it implodes, and the opposite with gold. It's about to explode.
When the subprime market blew up, and the threat to the entire mortgage market was obvious, as was the threat to the economy, what did the Federal Reserve do? They came out and reassured everybody that there was nothing to worry about, that the subprime problems were contained. Why did they do that? Because they were hoping that by denying that the problem existed, maybe they could somehow will it out of existence and somehow get people to change their behavior in the face of what should have been an obvious crisis, and they were hoping to avert it. And I think they're doing the same thing now. The Fed has absolutely no ability to fight inflation, so why even acknowledge that it's a threat when you can't do anything about it? So the only thing the Fed can do is deny, lie to the markets, tell everybody that it's all temporary, and that explains their failure to act. But their real failure to act is because it's impossible. Because the only way to fight inflation is to turn off the monetary spigots, to raise interest rates of Card's economy that they've erected. We have a worse financial crisis than 2008. The government would be forced to slash spending dramatically. They may even have to default on the national debt. Who knows what would happen if the Fed actually fought inflation? So because they can't, they're just denying the problem. But there is absolutely no evidence to suggest what we're really experiencing is the beginning of a long overdue, huge increase in the cost of living, not only the result of the inflation that the Fed has created since the pandemic, but of all the inflation that we created before the pandemic that we've yet to deal with.